Okay, so good day class. So for today's topic, we will discuss investment in equity securities. Okay, so as previously discussed on the other video, so we have different types of equity securities. So here we invest on stocks, we invest on shares, and the type of investment will depend if there is control, if there is no control, if there is joint control, if there is no joint control, if there is significant influence. But this time, we'll focus on the investment in equity securities covered under IFRS 9. So basically, investment in equity securities under IFRS 9, we have three. So we have the unquoted equity instruments, you have the financial asset at fair value through profit or loss, and financial asset at fair value through other comprehensive income. Okay, so we know that it's an investment account. So if we invest, diba, probably there's a return on us. So there's something in return with our investment. So here, if we invest on stocks, particularly in this IFRS 9, so the return is called dividends. So we call the return as dividends, and we have different types of dividends. So you have cash dividends, you have property dividends, you have liquidating dividends, and you have share dividends. Okay, so when you say cash dividends, so cash dividends, this is considered as income on your part. This is the income from investing uh, in equity securities or in stocks. So dividends are considered as income. Property dividends, these are dividends you receive non-cash. Instead of cash, you receive non-cash assets. So these property dividends are also considered as income. So this earned income nimo. So and you have liquidating dividends. So liquidating dividends, although it's a dividend account, but it's not an income account. So liquidating dividends is a return of invested capital. Since liquidating, pasabot nag-liquidate na ang company in the brink of kanang closing na the corporation. So bali, it's a return of invested capital. So iuli sa imo ang kato imong gi-invest sa capital through liquidating dividends. So it's not an income account, and you have, or it's not an income. And last is we have share dividends. Share dividends also is instead of receiving cash and other non-cash assets, so naka-receive ka og shares from the corporation nga investor ka. Okay, so you receive shares, and share dividend is not an income. Okay, on the part of the investor, it's not an income, it's only additional shares. So ni-increase lang ang number sa imong shares, okay, in that certain corporation. Here in the dividends, we have three important dates to take note. So you have the date of declaration, you have date of record, and you have date of payment. What do you mean by date of declaration? So date of declaration, ito yung date na the board of directors approved to declare dividends, to give dividends to the shareholders. So this is the time na the dividends are already approved by the board of directors. So this date of declaration. The second date is date of record. In this date of record, the corporation just get the names of the directors, the shareholders na qualified for the dividends, to receive dividends. So if na imong name dire as a shareholder sa date of record, pasabot ka qualified to receive dividends. But if kung wala siya, diba, you're not qualified to receive dividends. Okay, then the next is date of payment. So obviously, diba, so it's the payment of the dividends because not all the time na diretso bayad ang dividend. So kani declaration, so pwede wala pa gid nag-release, actual release sa dividend kani kinsa lang tong mga shareholders nga subject for the dividends. Okay, sila lang to maka-receive sa dividends kung kinsa to'y na-address sa date of record. The date of payment, bayaran na, settlement of the dividends. Okay, so basically entries at the date of declaration if there is no payment yet. So since kita ang investor, we record dividends receivable. And take note that dividend is considered earned or recognized at the date of declaration. So that's why at the date of declaration, we recognize already an income account, dividend income. This is the case of cash dividends and property dividends. So that's dividends receivable on our part because there's no payment yet. So on the date, we credit dividend income because on the date of declaration, the dividend is already earned. So we recognize income na at the date of declaration. On the date of record, no entry required because again, ilist lang ang names sa shareholders who will qualify to receive for the dividends. And date of payment, of course, settlement. So this time, we receive the actual, di ba? Or if cash gani ang yatag sa ato as dividend, so we receive the cash. So that's debit cash, then we credit the dividends receivable account. Okay, also in these 3 dates, there are important terms nga itong kinanglan i-take note. So you have, if you are going to sell the shares, di ba? So if ibaligyan nimo imong shares, between the date of declaration and the date of record in between, gitawag na sa dividend on. So pasabutan na, sige later, dividend on. And if you sell the shares after date of record, in between date of record to the date of payment, okay, so it is called ex-dividend. So what do you mean by that, diba? So dividend on, since imong at the date of declaration, you have already the right as shareholder to receive dividends. Okay, if you sell the dividends, if you sell your shares between on dividend on or between declaration date and date of record, so ang imong gibaligya dili lang ang shares nimo. At the same time, you also sell the dividends nga you will receive. Diba? So naka-accrue nga dividends at the same time the shares la imong gibaligya. So duha imong gibaligya diri, you sell the shares plus the dividend. Okay, so that's why here in dividend on, the selling price normally includes the accrued dividends. So the selling price is composed of your selling price of the shares plus the dividends, the accrued dividends. So in computing the gain or loss on sale of the shares, so we need to disregard the dividend. So kinahanglan nato siya i-remove sa selling price ang dividend to compute the gain or loss on sale. So this is the formula. You have total selling price or the proceeds received, the total cash nga mo na-receive from the sale transaction, okay, minus the dividend income, accrued dividend income, di ba? Nga you're about to receive. Okay, kay wala pa mo sa nadawat, di ba? Pero since you own shares diri sa date of declaration, you have already the right to receive the dividends. Then that is the selling price of the shares. So kanila ang selling price solely for the shares. So minus the cost of the investment or the subsequent measurement baka of the investment. So that is the gain or loss on sale. Okay, under ex-dividend, because diba, here you only sell the shares. If you sell the shares, ang imo lang share lang ang imong ibaligya. Wala na ilabot ang dividend. Why? Because diba, if ibaligya nimo dire, ikaw gyapon ang na right to receive the dividend. Dili ma-transfer ang right to receive the dividend sa imong baligyaan. Diba? So ang imong ibaligya lang diri is you only sell the shares because diba after na sa date of record, so imong pangalan nakalista diri, ikaw ang mudawat sa dividend. Dili pareha diri sa dividend on kay wala pa man ang record, so once mabaligya nimo sa in between this date, okay, pwede pa ma-transfer ang right to receive the dividend sa katong imong gibaligyaan. But here under ex-dividend, you only sell the shares. Wala na ilabot ang dividend because again, dili naman ma-transfer sa iya ang right to receive the dividend because wala na sa nakalista at the date of record because after na sa gibaligya. Okay. So, entries if you sell your shares dividend on tapos na accrued dividend income, so that is cash, this is the total proceeds. Okay, so gain or loss on sale either isa lang gid ang may tabuana, di ita sa pwede magsabay. So if there's a loss, debit loss on sale, then you credit the investment in shares account, this investment in equity securities, depende kung unsay classification, FVPL ba sa or FVOCI, pwede ra pod nga account iyong gamiton. Tapos the dividend income, the accrued income, that is the dividend income, then you have the gain on sale if there is any gain on sale. And under ex-dividend, since you don't anymore record the dividend income, so here, because ang shares lang imong gisell, so you have cash, investment in shares, so if there's loss, debit loss, then if there's gain, credit gain. Okay, let's proceed with each dividends, di ba? Kaning cash, property, liquidating, and share dividend. So you have cash dividend. So basically, you receive cash from your investment. And that cash nga mo na-receive is considered as dividend income, di ba? Because the return of your investment is through dividends. Okay, so cash dividends are considered as income when declared. So take note that, di ba, income is earned when declared. So at the declaration date. So cash dividend, it does not affect your investment account. So take note of the journal entries, wala investment account diri. So you just debit cash, you credit dividend income. So therefore, it does not affect your investment account. The second is property dividend. So instead of receiving cash, you receive property or non-cash asset. So property dividends are considered as income. So it's still an income to be recorded at the fair value of the non-cash asset received. So therefore, the value of the income, the amount of the income is measured at fair value of the non-cash asset received. So kung sa mo na-receive, hey, that's the value of the dividend income. So shares, take note of this, shares of another entity declared as dividends are not share dividends but property dividends. So share unsa na siya. So sige, let's have an illustration. Okay, kita si investor, we are the investor, we are a shareholder ni X Corporation. So shareholder ta ni X Corporation. Si X Corporation po, shareholder siya ni Y Corporation. So unsa gibuhat ani niya? Diba, property dividends. Ang gihatag ni X Corp sa ato is ang iyang shares bahin niya kang Y. So moto ang iyang shares kang Y iyang gihatag sa ato. So unsay accounting nato atong shares nga gihatag ni X Corp nagikan kang Y Corp. Kumbaga share ni X Corp sa Y Corp. So mao ang gihatag niya sa ato. So katong shares, di ba? Shares of another entity declared as dividends are not share dividends but property dividends. Therefore, the share of Y Corp owned by X Corp gihatag ni X Corp sa ato iyang share kang Y Corp. So therefore, here we account the transaction as property dividends. Okay, so that's why the entry is non-cash asset or you debit investment in shares because in Y, di ba? In Y Corp, dili kang X Corp. So non-cash asset or investment in shares, then you credit dividend income. So that is based on the fair value of the non-cash asset received or the fair value of the shares or fair value pwede po sa merchandise. You receive merchandise as dividend. Okay, that is property dividends. How about liquidating dividends? Again, liquidating dividends represent return of invested capital and therefore not income. So here, liquidating, so basically ang company ani pasirado na gid sila, mag-liquidate na sila silang mga assets. Okay, so kani siya, if naghatag sa liquidating dividends, it's just a return of your invested capital. Kung pila tayo mo gi-invest, di ba, murag giubalik lang nila sa imo. So it's either through cash or non-cash asset, you receive that, then you credit the investment in shares. So gitanggal lang nimo yung investment account because again, di ba, it's a return of your invested capital. So in exchange sa imong investment, bayaran kanila katong imong gi-invest. Okay, what will happen if, take note ha, liquidating dividends are not income. Okay, so what will happen if nag-liquidate na ang company tapos ang value sa imong investment 1 million, imong na-receive is 1,100,000 nga cash. Therefore, the 100 difference is considered gain. Diba? That's gain on probably liquidation or gain on kaning from your investment. So you can use that account. So pero what if baliktad siya, the value of your investment is 1 million but on the at the time of liquidation, nag-close again ang company, ang na-receive lang nimo is only 900,000. So ang difference, how do we account the difference? So we account the difference as write-off. So we record loss on investment in shares, then we credit the investment in shares account. So ana lang. Then next is the share dividends or stock dividends. So si kalahian ani. So kaniya share dividends or stock dividends. Share dividends are in the form of the issuing entity's own shares. Kagaina ang share ni X Corp kang Y Corp gihatag niya sa ato as dividend. So property dividend to siya. So kano sa ma-consider as share dividends if ang share ni X Corp mo iyang gihatag sa ato mismo. So di ba, issuing entities own shares. So ang investor ta ni X Corp kani, investor ta ni X Corp, ang share mismo ni X Corp mo yang gihatag sa ato. Therefore, katong dividend, tong shares nga gihatag ni X Corp from its own shares is considered as share dividends. Okay, take note, share dividends are not income. So share dividends are not income. So basically, di ba, mo increase lang imong imong shares pero dili na sa income. So share dividends does not affect the total cost of the investment but reduce the cost per share of investment. Take note of that share dividends does not affect the total cost of the investment yes, it increases the number of shares. Siyempre, nadungagan ka og shares, increase the number of shares. It does not affect the total cost of the investment, but it reduces the cost per share of investment. Okay, let's have an illustration. Okay, so basically, share dividends, pwede siya of the same class or different class because diba under shares, we have ordinary shares, we have preference shares. Okay, so share dividends of the same class. So basically, same class lang ang giiso nga shares sa imo nga dividend. So that is memo entry lang atong requirement dire. Memo entry lang atong buhaton. So this is an example of a memo entry. So you receive 2,000 shares representing 20% share dividend on 10,000 original shares held. Shares now held 12,000 shares. Okay, so maniya, di ba kagaina pag share dividend, it does not affect the total cost of investment. It increases your shares, number of shares, but at the same time, it reduces the cost per share. So this is the illustration. So your original share is 10,000. Diba? The cost of the share is 1,200,000. So therefore, the cost per share is 120 pesos. Okay. With the 20% share dividend, so nadungagan ka og 2,000. Okay. 'Di ba? So wala tay cost per share, wala po tay total cost. Okay, so the total shares now is 12,000, but the total cost is the same, 1,200,000. But right now, pila na lang ang cost of share? That's 1,200,000 divide 12,000, that is 100 pesos per share. 'Di ba? Ingon ko kagaina, share dividend increases your share. Yes, increase. It does not affect your total investment account or total cost of investment, 1,200,000, but it reduces the cost per share from 120 to 100. Okay, so kana lang siya. So this time now, ang value sa imong per share is 100 na. So if kung magbaligya ka, ang carrying amount is at 100 na. Okay, so Derita, share dividends different from those held. What if you owned ordinary shares pero ang giiso ni X Corp sa ato is preference shares? So how do we account for that share dividend? It's still a share dividend. So however, the original cost of the investment is a portion between the original shares and the share dividends on the basis of market value of each at the date of receipt. So may tabuani because again, share dividend does not affect the total cost of the investment. So atong buhaton dire, atong total cost sa atong ordinary shares ato tong i-proportionate, atong i-apportion between sa fair value or market value sa katong additional shares nga preference shares nga gi-issue sa ato as share dividend and the fair value of the original investment. Okay, so this is the example. So for example, a shareholder owns 10,000 ordinary shares costing 800,000. Subsequently, the shareholder receives 10% share dividend in the form of preference share. So you own an ordinary share, but the dividend given is preference share. So the market value of the ordinary share is 150 and the market value of preference share is 100. So again, we apportion the original cost is apportioned between the fair value of the original shares and the share dividend, which is the preference share. So ay naitabo, we have 10,000 ordinary shares original. Pila yung fair value? That's 150. Therefore, the market value is 1,500,000. The preference shares nga iso sa to is 10%, diba? So that is 1,000 of the original 10,000 ordinary shares. So natay 1,000 preference shares times the fair value, market value of 100,000. So the total market value is 1,600,000. So the original cost, which is 800,000, ato siyang i-proportionate. So nani na mahitabo sa imong ang composition sa imong investment. So you have 750 ordinary shares and nakay bag-o nga 50,000 nga preference shares. So take note again that the total cost does not affect, di ba? So unsay mahitabo? So our entry would be, di ba? So nag-debit tag investment in preference shares nga 50,000 ato pong gikaw-an atong ordinary share og 50,000. So basically, kumaga gibawasan lang ordinary, gidungagan og investment in preference shares. So therefore, the total cost of the investment is still 800,000. So that is share dividends from those held, okay, different from those held. Okay, so this time we'll just discuss shares received in lieu of cash dividends. So sa pasabot ani, 'di ba? Instead nga mo hatagan tag cash dividends, ang gihatag sa ato shares, 'di ba? So instead nga maka-receive tag cash dividends, shares na nun atong na-receive. So shares received in lieu of cash dividends are considered income at fair value of the shares received. In the absence of fair value, the income is equal to the cash dividends that would have been received. So in effect, the shares are treated as property dividends. So again, so if inani ang case, instead na mo receive ta og cash dividends but shares atong na-receive, so it's an income account gyapon siya. So, but the amount to be recorded is at fair value of the shares received, di ba? It is considered as property dividends, di ba? Fair value of the non-cash asset received. So, if ever dili available ang fair value sa shares, so let's assume that the amount of the income is equal to the supposedly nga amount nga itong ma-receive nga cash. Okay, so kato if ever wala siya napulihan. So, that is how we account for kaning shares received in lieu of cash dividends. Okay, kaning isa na pod baliktad. Instead nga hatagan ta og share dividends atong na-receive cash. So this cash received in lieu of share dividends. So using the as if approach, this means that the share dividends are assumed to be received and subsequently sold at the cash received. So unsa assumption nato in accounting this type of transaction na instead of receiving share dividends, we receive cash. So atong assumption diri, how do we account this one? So our assumption is, let's assume nga as if na-receive nato ang shares tapos gibaligyan nato subsequently. Kay nakadawat ta og cash. So that is how we account. So example, a shareholder owns 10,000 shares costing 1,100,000. Tapos subsequently, the shareholder received 150,000 cash in lieu of 1,000 shares originally declared as 10% share dividend. So instead nga makadawat ta og 1,000 shares nga 10% share dividends, ang ato na nang na-receive is 150,000 cash. Diba? Instead of receiving that 1,000 shares originally declared as 10% share dividend. So atong assumption, di ba, we receive first the shares before we sell the shares, di ba? So nadawat pa nato ning 1,000. So this is what will happen. So that's 10,000 ang original shares. We assume that we receive the 1,000 shares, di ba? So since share dividend man sa, it does not affect the total cost of investment. So our total shares right now is 11,000, but the total cost of investment is still 1,100,000. So this time, pila ang cost per share? So ni-decrease siya, that is 100 per share. Okay, after assuming that the shares were already received, say next, subsequently sold. So gibaligyan nato ang katong 1,000 nga atong nadawat nga share. So this time, sinaytabo, na-sale transaction. Pila yung nadawat nato nga cash? 150. So that's selling price. That's 150,000. Tapos pila value sa shares nga atong gibaligya? That's 1,000 times tagpila naman sa karon, tag 100 per share na. Diba? So times 100 per share. Okay, times 100, that is 100,000. Therefore, diba, you see 150,000 but the value of the shares ngayon mo na dawat is only 100,000. The cost of the shares that you receive is only 100,000. Therefore, naka-gain on sale. So we recognize gain on sale in this type of transaction. So that's 50,000. Gain on sale of shares, investment in shares. So probably the entry ani, dito na ta sa gain. So receive cash at selling price 150,000. We credit investment in shares. Pila value sa to investment in shares? 100,000. Okay, when we take effect na to, na-receive na to nga share dividend, then you have gain on sale. That is 50,000. So that is how we account this type of transaction if we receive cash in lieu of share dividends. Another also concept introduced here is the share split. So, di ba split? So, split ang shares, di ba? So, kumbaga, it's either split up or split down. Gipadaghan ang shares o gipagamay ang shares. Split up, increase. So what will happen if na-split up? So actually, it increases the number of shares. Mutaas ang number sa shares nimo. Mo reduce ang par value or cost per share and no effect to your total cost of investment. So actually, same application sa share dividends, di ba? So it increases the number of shares. It will reduce the par value or cost per share, but it does not affect your total cost of investment. Actually, same computation ani, diba? So same lang ang total cost, but the number of shares increases and it decrease the per share cost per share of the investment. So if you say split down gipagamay ang shares. So decrease the number of shares because ni gamay ang number of shares, ni increase ang par value or cost per share, but again, no effect to your total cost of investment. Okay. Also, special assessment. What is special assessment? This, on the part of the investor, this is considered as additional capital or additional capital contribution of the shareholders or investors. So basically, magdugang lang sila. Okay. So the entry is, di ba? So that's, kumbaga mura sa nagpalit o an additional investment or nagdugang sila og investment for that corporation. So that's investment in shares, debit, that's credit cash. Okay, also in the concept of investment in equity securities, accounting for stock rights is also introduced. So how do we account for stock rights? Ano din ang stock rights? Kumbaga, this is preemptive rights sa mga shareholders nga na sila right to purchase shares from the company on a limited time at a lower price. So gamiton nila tong stock rights nila para mo lang gamiton to acquire another shares, 'di ba? For a limited time at a lower price. So kaning stock rights, for every share you own, nakay isa ka stock right. So kumbaga if you own 10,000 shares, you have 10,000 rights, 'di ba? Nga pwede nimo sa gamiton, pwede nimo sa exercise to purchase another shares para madungagan ang number sa imong shares. But that is on a limited time basis. 'Di ba? Kung i-off preemptive right na i-offer una sa inyo as shareholders of the corporation before sa i-offer sa other parties, katong mga dili pa shareholder. Okay, so also accounting for stock rights, you also have 3 dates to consider. So you have date of declaration, you have date of record, and you have the expiration date. So date of declaration, so this is the time nga gi-approve pod nga mag-declare og rights. So basically that's 1 share equals 1 right. And date of record, there is a date of record. This is the time nga you will be issued by the share warrants. Share warrants mo ni ang mag-represent nga you have the rights. Diba? You have the stock rights to acquire shares of the corporation. Okay, so expiration date. So since it's a limited time, if you don't exercise the right, ma-expire to siya. So di mo siya magamit. Okay, so also in accounting for stock rights, you also have ginatawag na to right on and ex right. So right on, if you sell your share or if you sell the rights, di ba? Lahi ang shares, lahi ang right. If you sell the rights, if you sell the rights and or the shares between the date of declaration and before date of record. So when you say right on, share cannot be sold without also selling the share rights or vice versa. So if right on mo sa i-sell, the share cannot be sold without also selling the share rights or the vice versa. So basically, ay mong gibaligya dire duha gyapon sa the shares and the rights. Diba? So X-right pod, that is shares can now be sold separately from the rights or vice versa. So if you sell the shares after the date of record but before the expiration date, then you can sell separately. Diba? You can sell separately the shares and the rights, share rights nimo. So you can sell under X right can now be sold separately from the rights or vice versa. Okay, accounting for stock rights, you have 2 accounting like method used here in accounting for stock rights. So basically, medyo I'm not sure, but with the 2019, it says here that not yet, 'di ba? Wala pa siya na nahatagan og clear nga provision as to what type of how to account stock rights. So we have 2 accounting method here. You have accounted for separately and not accounted for separately. But according to the as illustrated in the book, 'di ba, it is more appropriate to use the not accounted for separately na method. Okay, so not accounted for separately. So let's compare what's the difference between accounted for separately and not accounted for separately. So basically, accounted for separately, di ba? You can account the shares and the rights separately. But under here, not accounted for separately, basically you cannot account separately the share and the rights. So it's an embedded derivatives, kumbaga kung according to IFRS 9, so kung unsa ang classification sa host contract which is the shares, same po dapat imong pag-account sa katong embedded derivatives niya which is the rights. Okay, so these are the transactions related to stock rights and how do we account under accounted for separately and not accounted for separately. So first, you have acquisition of original investment. So basically, you acquire, this is the initial measurement. That's same entry, investment in shares, credit cash, investment in shares, credit cash. How about receipt of share rights? Okay, so you receive, di ba, share rights, di ba, declared by the board that you will receive one right for every share you own. So here, how do we account under accounted for separately? Because accounted for separately siya, we can account separately the shares and the rights. So therefore, how do we record? So we debit share rights. Take note of that because portion of the total cost of the investment of your share is partly to sa rights. Diba? So here, you debit the share rights, then you credit investment in shares account. Kumbaga, portion of the total investment in shares account appealing to the share rights. So here, we account it separately. That's why na-minus na itong investment in share because gipulihan na itong share rights nga account. Okay, how do we measure or how do we record the share rights, di ba? Unsa nga amount atong i-record diri? So share rights is recorded at in order of priority. Therefore, the first priority is fair value or market value. Therefore, share rights is measured at fair value or market value. If not given, if dili wala gihatag ang fair value and market value of the share rights, so let's proceed with number 2, di ba? So we need to compute number 2. We need to compute the theoretical or parity value of the share rights. Okay, so in not accounted for separately because 'di ba the shares and the rights are not accounted for separately. There's no entry for the rights. So memo entry lang sa nga the shareholder has 10,000 shares and he received 10,000 stock rights. Na pwede niya gamiton to purchase another shares within a limited time. Okay, so this time how do we compute for the theoretical or parity values? We have two formulas here. Okay, so we have two formulas. So, when share is selling right on, so magdepende sa if ang shares is selling right on or X right. So, if when share is selling right on, how do we compute the parity value of the share rights if the fair value market value is not given? Okay, so this market value of share right, this is the market value of the right, market value of the share, I mean share right on at right on minus the subscription price. So subscription price mo ni ang price sa shares if mo palit gamiton nimo ang rights to buy a new share. So that is the subscription price. So divide by the number of rights to purchase one share plus one because usahay when you buy shares, one new share kinahanglan ka og more than one right, di ba? Para ma-convert nimo. Like for example, you have 10,000 shares, so that is equal to 10,000 share rights, but you can acquire one new share if na kay 5 ka share rights. So, inana siya. So, this number of rights to purchase one share plus 1. So, that is the value of one right. So, that is the parity value of your right if naka-right on siya. So, next is when share is selling X right. How about X right? So, what is the formula? So, actually, the numerator is the same. That is market value of share right, share X right ni, this is X right, minus the subscription price, divide by the number of rights to purchase one share. So what's the difference, di ba? Wala na plus 1 under X right. So just divide number of rights to purchase one share. Pila kinahanglan nimo nga rights para maka-purchase kag one share. So that is the value of one right. So mo na nimo amount gamiton dire. If dili given ang fair value or market value, you need to compute the theoretical or parity value. And depende if right on or X right siya. Okay. Third transaction is exercise of share right. Unsa exercise of share right? So karon imo nang gigamit ang rights to purchase another shares, to purchase new shares, di ba? So imo gid sang gipahimoslan, di ba? Okay, so what is the entry? Siyempre, you purchase new shares, so you debit investment in shares. Ako lang sa gibutang new ha para atong ma-identify nga this is new share from while when you use your share rights to acquire new shares. Then you credit cash and you credit the share rights. So basically, the investment in shares katong new investment in shares new is equal to the subscription price of new shares. So basically, this is your credit cash. This is number of shares acquired times the subscription price, di ba, of the new shares. So mo na imong gibayaran, and in exchange for also, di ba, gagamit kag share rights nimo. So therefore, gigamit nimo ang rights para maka-acquire ka og new nga shares. So therefore, you also credit the cost of the share rights exercise. So kung pila lang imong gi-exercise, so for example 10,000, 5,000 ra mo ra pud imong butang, pero in this case the assumption here is gihurot nimo tanan, gi-acquire nimo tanan. So again, the investment in shares new is equal to the subscription price of new shares, that is subscription price times the shares acquired plus the cost of the shares exercise. Pila cost atong shares nga imong gigamit to acquire new shares. Under accounted for separately. But under not accounted for separately, investment in shares is equal to the subscription price of new shares only. Because again, wala nimo sa gi-account separately si rights and the shares. Therefore, wala kay rights nga account diri. Diba? Share rights na account. Therefore, di po ka mag-credit direct share rights nga account. So therefore, you debit investment in shares lang, that's equal only to the subscription price times the number of shares acquired, new shares acquired. So credit cash lang. What if wala gi-exercise ang right pero imong gibaligya? Because again, you can sell the rights. Diba? So you can sell the rights para katong imong gibaligyan siya ang mag-purchase of shares. Diba? So what if wala nimo gi-exercise but you sell the rights? So under accounted for separately, here you will recognize gain or loss because diba? What if ang gibaligya nimo at a higher price compared sa cost sa rights nga nasa imo? Diba? So here debit cash, it's either again for the transaction, it's either loss or gain on sale of rights, pero di sa may tabo nga na sila duha in a transaction, in an entry. Okay, so you credit the share rights because imong gibaligya. Under not accounted for separately, unsa nay tabo? Because you cannot separately account the shares and the rights. So when you sell the rights, ang katong whole investment account imong gibaligya. Diba? So basically amount recorded is equal to the selling price. No gain or loss is recognized from the sale. So therefore, if you sell the rights, diba? You did not exercise the right, but you sell the rights. So under not accounted for separately, so you just record kung pila to mo na receive from the sale. So that is your cash. Then you credit the investment account. So again, no gain or loss is recognized from the sale under not accounted for separately. But how about wala nimo gi-exercise, wala po nimo gabiligya. Since it's a limited time lang, niabot na ang expiration date niya. So what will happen if the shares will expire? So under accounted for separately, share rights will expire. Under accounted for separately, 'di ba? It's a loss on your part already because 'di ba wala nimo gigamit. 'Di ba? Sayang, 'di ba? Pwede ta na to nimo sa magamit as maka-acquire kag new shares. Diba? So, it's a loss on share rights and you credit share rights. Under not accounted for separately, memo entry lang ang required because again, you did not recognize any share rights accounts here. Diba? So, memo entry lang nga na-expire na. Di na to sa pwede gamit to acquire new shares. So, nag-stop na ang imong stop na ang imong right to purchase new shares in the corporation. So I guess that's all for the investment in equity securities. So I hope you have learned something and thank you for listening.